we can consider that the correction or a stronger correction, or if we consider that the downtrend in sterling is about to be concluded or finished, we cannot consider this because of the negative momentum plot that we're having on the 4-hour charts. Okay, so what are we seeing? What's happening? We expect that we're going to be going to the next neckline. We could again go to the longer term analysis in case you have forgotten what longer term we're looking at, but I believe everyone remembers. Let's just take the internals. The internals, we're trading between two necklines. Are we going to test that neckline, next neckline? All right, so the market is very oversold and is trying to do, we just broke out of that diagonal. It is doing an ascending triangle. So if I were just, there's a neckline here, and the label count, this is a 4-hour chart, is correct. There's a internal 1, internal 2, internal 3, there's a 4A. All right, so there's a 4B, there's a 4C. All this could develop into a 4A and then another 4C. If I were to take a clone of this, just bear with us a second, or no clones. If I were just to use this neckline, bring it lower, I'm saying an ascending triangle. You're saying an ascending triangle. So this is the base of that triangle. This boundary is of course the top of that triangle. Okay, so why would this happen? Why is this happening? Fundamentally because the market is very overvalued or oversold, I'm sorry, and therefore it will do muted consolidations. It's really that simple. Muted consolidation, on meaning that there is actually demand for sterling, but it is very oversold, and therefore it is keeping its own price levels without breaking lower. At some point, this is going to terminate and we're back into the bear trend. You'd also consider that we're doing a wave 3. There's an wave 3 here. So the high correction is going on. The long count is probably not correct. This is a strong degree wave 3. All right, meaning, so let's, all right, so we had a 4A and we had here 4A and a 4B and a 4C. That's what we were expecting. It's not really the case. The market has decided no, it has better ideas. It is going to be doing, it believes, so this has become now 4A. Forget about the white count, the white internals, and this becomes 4 here. The market is of course dynamic, and we should always retain the ability and the right to move the labels in larger cycle structures. So that's of course a B, 1, 2, 3. There's going to be a C. The market goes down. There could be C, there could be D, there could be any, but we just try and keep it simple. Whatever we're going to be saying is just 4C. This is the end of this probably, and this is 4C. Right, so it's hang, no problem. I believe now we all know what we are talking about. Okay, and we always move on from neck. Really, it's very important to incorporate the necklines in our analysis. We always move from one neckline to the next. All right, so over here we want to know where that wave, what corresponds with that wave 1. It is this really segment at that neckline. This is a wave 1 and this is a wave 3. Maybe that neckline really is a bit higher, but looks like we're going to break it and go to the next neckline. So it should be this motion. We're having now another inverted, so we're having another head and shoulders at the neckline. The break lower, we know there's a neckline lower. So we're just moving from neckline to neckline. We're going to 131 at least. Of course, 131 is 50% between the two necklines, so that's where we'd expect to go, and doing an extended 3. It all amounts to whatever we're seeing technically must interpret this cycle count. This is just one cycle, not when we say one cycle, it's one straight line. It's one steep down curve into the cycle. If you have a very big cycle, this is still the downside. All these internals are really nothing compared with that higher degree downside of the cycle, and this is that interpretation of what we're seeing here in momentum. Anything that you see on 1 Our charts are just rejections at oversold levels. All these rejections, when we go live 1 hour, we can draw lines here. You see these oversold rejections, and they're all heads and shoulders. Okay, so you can then interpret the momentum, the pattern accordingly. That's all there is to it. The labels get just tucked in accordingly. Okay, so this is what we're seeing. We're seeing a 1, 2, we're seeing a 3, 4A, 4B, 4C. This is an ascending triangle. That 4C, of course, is a 3 swing, 1, 2, 3. And then this is what you're gonna have. So you can just keep it simple. Forget about the other arrows. All right, so we know what's going on. Now, our best entries, of course, are if you're on wave 3, you want to take projections right from wave 2 all the way down to wave 3, which is this point here. This is really your wave 3. We have a 78.6, don't need that one. Your best entry looking at 1.3330. So just want to move this off. All right, let's take a look at the breakout lows and breakout highs for this. Breakout high for sterling dollar is 1.3328. This level here, 1.3328. So I don't even think we're gonna get it, but technically speaking, it's below level 1. All right, 134.11, and it is possible to get some kind of a spike all the way there. We would not be surprised. Remember that strategy that we were implementing, that we're always going to be selling 3% into sterling dollar when we have the size. So as the market moves lower, we always sell 50%, 38.2% internal higher resistance levels if we do this. Okay, so we have a resistance level here. This is a 4-hour chart, very strong resistance level, 33.28. all right, and it is very possible because we think we're seeing an ascending triangle, but it could just be an A and a B and a C.